Good evening, everyone. Good to see everyone coming on. Welcome to another segment of Evening Market. I am your coach. We are going to tread some ground today. Nikkei. How's everybody feeling today? I'm feeling tonight. I made some good money today in the markets. It's been a good one. It's been a good one. So it's always good to be in community. Good evening, everybody. Good evening, Judy. Good evening, Dr. Ann. Good evening, Joy. Brian's here. Ruben is here. Paula. Good evening. Michelle. Good evening. Yeah. Good evening, Brother Tim. Yeah, I'm glad everyone's doing well. Glad everybody's pouring in. We're going to have a good segment tonight. We're going to be trading Nikkei tonight. But before we begin, let's pray. Father, we thank you for another opportunity to approach your throne, to be amongst community. Where two or three are gathered, we know that you will be in the midst. There's more than three. There's more than two or three here, so we know that you're here, that we're called by your name, and so we know that you respond. We ask, Lord, tonight that you would be with us. Give us a spirit of excellence. Allow us to excel in these markets. Allow us to grow in strength, in education, and wisdom, and knowledge. And for this, we'll forever give you praise, honor, and glory. In Jesus' name, amen. All right, well, let's get to it. Let's get to it. We got some things going on with Nikkei. In our Discord, we talked about a few things that I want to touch on tonight, and it should be a fun segment. If you have questions, ask them. But so I did a poll in the Discord, and I said, what do we, I really like coaching in these segments, even though we're going to trade and make some profits. But it's like, what do you want to know about? And so a few things came up: fair value gaps, entry strategies, what are pullbacks, order blocks. So we'll talk about a few things. And as I'm going through this, really they all relate to each other. When you start talking about fair value gaps and order blocks and trees, how do you enter, and what are pullbacks? They're really saying the same thing. There's different terms for different things, but they're all really saying the same thing. And so as we start to chart this, as we start to go through this, I will be explaining, charting with you, answering questions. It's going to be a growth night tonight. We're expecting growth. All right, so let's get to charting first. Let's turn off all the indicators. Let's just look at the naked charts right now. Let's turn everything off. I'm going to even turn my TDI off right now. Let's just have a naked chart here. Pull that down. All right, naked chart. All right, this is Nikkei right here. Make sure everything is erased off of there. Perfect. George is on. Good evening, George. Great evening. Yeah. Good to see you. I'm glad you made it on. All right, so Nikkei. By the way, I don't know if anybody caught the 7 o'clock candle on Nikkei. That went crazy. That was I made like 5,000 on this candle. But we'll talk about it. We're at the 8 o'clock. We should make some money on that one as well, some profit on that one, because it's a nice setup right now. If this is a reversal candle, but let's talk about it. And I want to talk about a few things here based off of what you want to talk about. So we're in this downtrend. Nikkei has been falling. It fell more than 2% overall. Yeah, you got it. It made about 1,000. Yeah, that was a good move, man. That candle, man. Look at this. When you look at this run from the bottom and then the pullback and then the run up, There's a lot of reasons why you should have got into that 1 hour candle. Um, but I'm kind of looking for a sale back down to a liquidity zone before going back up. I think we're going to ride this one up all night, but kind of looking for 8 o'clock to sell off a little bit, just based on what the lower time frames are showing us. I got in and got out too soon. Yeah, it sort of played around and then took off. But let's talk about it. Let's talk about let's do our top down. We'll start with the day now, because we know we've been on this bullish move, which is we see that, but we had a 2% pullback, a very big pullback, which is a lot of things happening. Is really U.S. economic news, and a weak yen is to blame for that pullback. A weak yen. We could probably look at Japanese futures to see what that has been doing as well. This is Japanese futures. Look at that compared to the US dollar. So the yen has been falling. That's really been affecting, how we look at Bank of Japan and when you look at those stocks, their currency is really hurting right now, and it's continuing to fall. So in the grand scheme of things, when you look at Nikkei, you have to keep that in mind, not necessarily for what it's going to do, but just keep in mind that that's where we're at. But we did have that pullback. We had this big surge, and then we had a pullback, and that pullback right now, just on the naked chart, is hitting a level of old resistance turn support, right? And so we pull back to a healthy level. You can measure that retracement. I'm on the day chart. We measure that retracement. And one of the questions was, what is a pullback? Pullbacks are there's a lot of reasons for pullbacks. And so if you're in an uptrend, you're making higher highs, higher lows. So higher high, higher low, higher high, higher low, higher high. Now you have a pullback for the higher low. And there's reasons for that. One, if the intent is to go higher, it is necessary to go back and get orders, to get sell orders in order to get to push price higher. So buyers are not necessarily buying high, but they're buying low. So if you buy low, sell high, if you're at a high, you want to wait for the pullback if you're a smart buyer. And so there's a lot of orders that sit down lower, and as price goes on sale, that induces a lot of buyers, right? So that's number one economically, is that as price cheapens, it becomes more attractive for the buyers. I always use the coat analogy. If I'm at the store, and do I want to buy the coat for full price, or do I want to buy it at a discounted price? And so if it's 1% off, I may not want to buy it. If it's 10%, okay, maybe. If it's 50%, oh yeah, let me get 2 coats. If it's 70% off, oh, let me get 3 coats. And so right now we can see that this pullback is 78.6. So buyers rode it all the way up here. That was enough to induce the sellers. Now we're pulling back to 78.6. Is that enough to induce enough buyers to take this back up? All right, so that's one of the things with the fib. You want to measure that retracement, and this is what we call the pullback, that it's counter trend is going up, but it's healthy to pull back to introduce more buyers into the market. All right, and so that's what we're seeing with that 7 o'clock candle, is that more buyers are starting to come in. Go down to the day, and we can see this old resistance is hitting support, and the buyers are starting to come into the market. And so then we jump down to the 8. We see the same thing, that it was the push up, now the push down. We have this, you can somewhat see this left shoulder, head, right shoulder, and usually you measure the length of the head to the neckline. So the neckline is right there. You put that down where it broke the neckline, and it brings you right down to this liquidity level right here. So this is really the profit area that we're looking for, or excuse me, the support level that we're looking for on this pullback. Is that going to be it? And is price going to push up? All right. So We're right now, this dotted line represents the session open. We're at 0 right now. It's going back and forth around 0. So price isn't really moving. So I'm taking my time here. So I'm stepping down to the 4-hour. I know that this is a support zone, old resistance support zone. So we're looking for the buys in here on the naked chart. And now I have the idea here, and here's the hour. So now I'm looking on the hour, and I'm looking for this to climb, to evidence that it's going to climb out. So if you guys have been with me for a while, you kind of know how I mark out liquidity, where you have usually a pattern, inverted head and shoulder. So let's say this is left shoulder over here. Price is pushing down. We introduce a left shoulder, and then we dip down into liquidity. We take the push down and we mark that, the green candle that introduced the push, and we mark that green candle, drag it over. All right. And that becomes a liquidity zone. So what we're looking for is the 7 o'clock candle pushed up. We're looking to see if price action is going to push through through this liquidity zone. If it does, we'll wait for it to retest this liquidity zone, enter into buys, and push that back up, right? So if we reject, it's retesting it right now. If we reject, let's say we reject right here. If we reject right here, then we possibly can start entering to buys. Now, price could push down and create a double bottom, and we can enter into buys down here. Either way, if price pushes lower, then price is going to fall lower, right? So that's theoretically what we're looking for tonight. Is this going to be a reversal area? 8 o'clock candle's already opened up and is pushing down into this liquidity area. All right. So and that liquidity area makes sense just because. Now let's go back to the TDI. And I just want to show you something here, because we've been looking at just price action, but I want to bring the TDI into this. So TDI is showing price is going down this way. We've hit a level of resistance right here. And we know that this is liquidity zone, so I'm gonna get rid of it, right? So TDI is pushing higher while price is remaining lower. Right now, that creates for us divergence. So we can mark out that this resistance that's here right now is holding up as resistance. So 8 o'clock candle may, unless it breaks through this and retests, 8 o'clock candle, we should be testing that down just based on the divergence, the regular or the hidden divergence that's right here. So once we get that, we can start turning on MAs like, oh, okay, yeah, we got a 1 hour 50 on hidden divergence. Like we can take, that's really a setup that we can take to the downside, right? And so we're thinking about sales. We got the push up. 8 o'clock is sometimes a reversal candle where we could take the sell down. So that's number one. When we start going down, let me get rid of the MA. When we start going down in the time frames, you're going to see other confluence. So you're going to see the hidden divergence. You're going to see 15 isn't really shark finning. Okay, so 10-minute is now giving you the shark fin, right? And so the shark fin was here, the sell off. Now as it pushes up, it's going to give you some divergence, and you see if the rejections are here or the pushback down. 5-minute short bands are starting to open up, and it's getting kind of messy right here. So that's telling you that price wants to push up again. All right. And then we go down to the lower time frames, and we can start to see bands are starting to come up. So it's not looking as attractive, but the 1 minute does look attractive. You do have somewhat of a downtrend that we can probably take sales off of, and then pull this right above where it's been resisting and take that to the downside, right? At least for a 2-to-1. So that's what it looks like tonight. It's kind of already moving for those that are thinking about sales. That's kind of what I'm thinking about right now is, do we want to take the sales down here? That's the question. All right. So, like I said, I made 5,000 on this, and then I switched the account. And so I'm going to try to build up this account a little bit, but that's kind of what we are doing from a naked chart and TDI standpoint. All right. Now, having said that, let's talk about it. Let's talk about entries. Let's talk about first fair value gaps and how that plays, because I did a naked analysis on just what price action is doing. That was just a naked analysis. I pulled out a fib, I used the TDI, but for the most part, it's a naked analysis. It wasn't really a lot going on with my analysis that needed an indicator. But let's talk about it. Let's first talk about fair value gaps. All right, so you can call it fair value gaps. I very rarely use the indicator. I brung it on tonight because you were interested in seeing it. But let's just talk about what it is. So when you talk about liquidity, order blocks, whenever price is pushing down to let's say that buyers want to come into the market, there are order blocks where buy orders are sitting. All right. And you can call them order blocks, or you can call them fair value gaps, where orders are sitting that price will pull back, grab those orders, and then continue to the upside or the downside, depending on what kind of order block or what kind of fair value gap it is. All right. And so the way that we identify it is usually, there's a few different ways that you can identify it. One, I showed you more so what is the ICT strategy of prices going down. And let's say, and let me put it like this. I want to talk through this really slow. We got time tonight. This is slow markets. It's evening markets. So I could talk through this. And I really think it's necessary to do that. So price, we are binary traders. It's a buy and sell. There's only two options. We're either buying or we're selling. And so once we determine direction, let's say if we're buying, it's either risk on, risk off based on the probability. If it's a high probability, we put risk on. So we enter the buy position, or we say it's a low probability, we put risk on with lower risk size. Okay, so that's easy to understand. But also what's important is what price is doing beforehand. So right now we see prices making lower lows and lower highs, right? And so if you're looking at buys, you want to see a break of the structure before you confirm that it's time to buy. A lot of people say, well, that break of structure is going to be too late. Price is going to be too high, and it's going to be too late to get in. And so what you'll commonly see, and I think Nedra posted it in our Discord today, is that price pushes out and breaks the structure, but more times than not, it pulls back to retest, and usually it retests at what people call a fair value gap, or it retests at a liquidity level or order block, and that gives you a high probability to trade, to enter into the trade with maximum risk, right? And so that's the way that we trade. So keep that in mind as we start talking through what's fair value, and whatnot. All right. Okay. Breathe. Let me take a sip of water. All right. So now, fair value gaps. How do you identify them? So number one, with fair value gaps, we're talking about a 3-candle pattern. It's always going to be 3 candles with fair value gaps. Now, I just explained liquidity from an ICT perspective, that I'm thinking that it's going to go long. We're starting to bottom out here. This could be a left shoulder. I'm grabbing the green candle that introduced the left shoulder, marking that out as liquidity. Once that breaks, it pulls back, I can enter the order to the upside. Right, so that's a simple concept there. That price will break, it comes in retest, I enter the order on that retest to the upside, right? And then we can just it could just trend up like that. All right, if that's what I think it's going to do, and that would be a trend. It could just be range high, range low. So if this is range high, range low, then I'm just buying at the bottom, selling at the top, right? So if I'm not looking for a trend. All right, so that kind of concept is easy to understand for everybody. But once you get to fair value gaps, it's a 3-candle pattern. And what happens, what you're looking for is you're looking for a momentum candle, right? And so the 7 o'clock candle was momentum. So that candle pushed through. And let me enlarge my screen so everybody can see this. All right, I think everybody can see this. All right, so price is coming down. We got all these red candles. And look at this. We got 1, 2, 3, 4, 5, 1 hour, 5 hours of red candles. And then 7 o'clock comes and 1 hour erases 5 hours of price action. Right, so that 1 hour, so you get, that's called a momentum candle. There's a lot of volume, a lot of buyers got introduced at this price and push price up, right? And so that happens, and a lot of, we made money on that candle, but a lot of people miss that candle. And when people miss that candle, that means that there's a lot of buy orders that come in at 8 o'clock that are still sitting down here, right? And so how you identify it is called fair value. The way that you do fair value is you take the candle before and the candle after it, and you mark out the wick. So the top of the wick of the candle before is right here. The top of the wick of the candle after is right here. Right? And so usually what price does is it pushes up, but then that next candle comes back down, and this entire area becomes fair value gap. You can take the buy order. Let's say we're looking for a long position. You can take the buy order there, and you can pull your stop loss just below the bottom wick. And then usually, you look for a 1 to 2, or some people do a 1 to 1 or a 1 to 2. But that is fair value. This was the candle. The next candle is going to push down and go into this fair value to pick up the rest of those orders. Those orders are considered order blocks, where buy orders are sitting right there. That's going to be, and you're going to find structure there as well, normally. So, as price, if you miss this candle, price is going to push down. 8 o'clock candle is going to push down. It's going to push down into this area, and then we can take buys up to that. So right now we could probably enter into a buy position because it's the bottom of that fair value gap, or it's the top of that fair value gap. And we can mark this out with a rectangle to just mark out the zone. Bottom of the wick, top of that wick. This is the fair value. Let me do it like this. All right, so this is the top of that wick, or bottom of that third candle, top of the first candle. They meet. That becomes the zone. We bring over our trade idea, enter at the top of that zone, move stop loss to the bottom of that zone. And that's all it is. All right, and so that's called a fair value, a buy fair value gap, where price, you got the momentum candle, it pulls back into that fair value. We can catch the buys to the top side. And then if it's trending, you can make a longer play. If it's ranging, then you just go to the top of the range for your take profit. And so that kind of concept really addresses order blocks, it addresses entries, it addresses take profit, it addresses stop loss by just seeing a 3 candle pattern and seeing where the fair value gap is. Now that's on the hour, right? Let's look at a lower time frame. Let's look at because you can do this on any time frame. This is an hour time frame, but let's just jump down to like a 5 minute, right? So 5 minute, you want to find the momentum candle, right? So like right here, price is going down. This is a momentum candle, right? And so, you know, your fair value is going to be that third candle, bottom wick, and this is bottom wick. So you got a fair value gap here. You have, here's another momentum candle. But, okay, here's the thing. Here's the thing with it. I'm glad I did this. Let me go back to the hour. All right. So and you would wait for this candle to close and then catch the bottom of it, right? So you want to do that first because this candle's still in motion. This third candle's still in motion. So you want that candle to close first. But let's just say that, you know, bottom is right here, the bottom wick, top of the wick. This candle that's here is, you don't want that to, once that candle breaks this fair value gap, it's no longer a fair value gap. It deletes that fair value gap once you push back through there. So that's important to note, that you don't want an overlapping candle there. And then also this first candle, you don't want that to be all the way up into that candle. And you don't want, hear this, the first and third candle, you don't want that overlapping. Like for instance here, this candle here is a momentum candle. This is the first candle before it. This is the first candle before it. This is the second candle. That third candle overlaps the first candle. So you don't want that. If they overlap, then that erases the fair value gap, right? And so when I noticed that when I jumped down to the 5 minute and I was started to mark off this momentum piece, is that yeah, you can do it here. So here's the momentum candle. All right, so this is the first candle, second candle, third candle. Top of that first candle, bottom of the second. So this is a fair value gap right here on the 5 minute. Second one, this pushes, or that's that one. This is the second one. This one pushes up, right? So first candle is right here. Second candle is right here. So look at this. That's the top of the wick of the first candle, bottom of the wick of the second candle. Stretch that over, and look what happens is price pushes down into that liquidity zone, that fair value gap, and it pushes up, right? So you could enter the trade right here and then catch it to the upside. That's fair value. Same thing is, and so now you have it the opposite way. Currently, this is a momentum candle. So first candle, and this is a buy order, a buy fair value gap. And now I'm going to show you a sell fair value gap that's happening right now. So this is the momentum candle. This is the first candle. We grab the bottom of that wick, and then we go to the third candle and grab the bottom of that wick. And look what happens is that next candle opens up, goes into that liquidity, and now starts to sell down. Now, where do you think this is going to sell down to? Well, it's probably going to sell down to this buy fair value gap. So this is the sell fair value gap right here. Let me change the color of that. It's a sell fair value gap that's probably going to sell down to this buy fair value gap. And if it passes through this buy fair value, then it'll go down to the next fair value gap. Yeah, Tisha, that's right. That's why they call it a gap. It's the gap between the first and third candle. So it's a gap between the first top wick candle and the gap between the third bottom wick candle. All right, so that's how you manually do it. I don't have this on my chart. I just added it for tonight, but I added a fair value cap indicator. When you turn that on, that's all it's doing. is that it's going to mark out your buy and sell fair value gaps, but that's the way that it does it. So I just turned on that indicator, and what you can see is this is the momentum candle. This is the bottom wick of the third candle, the top wick of the first candle. That's the liquidity zone. Here's the next one. This is a momentum candle here, bottom wick of the first candle, or top of wick of the first candle, bottom wick of the third candle. Price pushed down into that and went up. This is the next one here, momentum candle, the first candle, top of the wick, the next candle, bottom of the wick. So now they're marking out this whole thing, which I wouldn't do on a 5-minute here, but this is the one I just marked. Is the you have a momentum candle to the downside, top of the wick here, bottom of the wick here. That was a sell fair value gap, but we're in buys, so that's why that broke, and structure is buys. So you just saw that that indicator just erased that sell fair value gap because of we're in buying territory right now. That 7-hour pushed up, we should be in buys, and would love to be in buys. And that's what we talked about off of the hour. That's what we were talking about, right? And so when you switch time frames, those gaps are going to change. So for instance, this is the hour time frame, the first candle, top of the wick, third candle, bottom of the wick. That creates the fair value gap. You enter your buy right here and catch it to the upside. Now look what it's indicating. It's indicating a sell fair value gap that has been exhausting. Where did you get this sell fair value gap? Well, you got it off of this momentum candle right here. So price was pushing up. This momentum candle pushed down. And so the first candle, bottom of the wick, third candle, top of the wick, you stretch that across, and that is a sell fair value gap right here. So what happens is price, and you can see this, that most people are going to be on this fair value gap like this. They're just going to pull a little bit above and push down. These wicks above the fair value gap is trying to hit these stop losses because it's a common concept. So most people stop losses just above the fair value gap. So these wicks that go up above it are just trying to hunt for the stop loss. And then price goes down. So that's fair value gaps. When would you have gotten in on that second fair value gap? Well, you get in, you can, like, if you identify, let's say that this is a momentum candle and you want to get in on that, you can get in on the top. It's just price action. You just watch price action. You combine this with the, you talk about the 5-minute, you combine this with, let me turn this off and just let's look at this one, this fair value gap here. Let's just look at this one. Yeah, so let's say you wanted to get into this buy, and you want to catch that 1 or 2, you want to pull that down below. Let's say you wanted something like that. So when price started retracing down, as soon as it gets into that fair value gap, you look at, you can look at the TDI, you can look at structure. This is the resistance right here. Old resistance turns support, but anywhere in here is okay to get in, right? And so once you get in, your stop loss is just below that. And so you're looking for the I. It's binary, so it's either buy or sell. So if you're wrong, your stop loss is just below that. It'll take you out of the trade, and you can start looking at the downside. But if you're right, then yeah, you're going to create a new higher high, or you're going to go, if it's ranging, you're going to go top of range. All right, good question on that. All right, so now having said that, let's look for what we're going to do for tonight. I kind of, I've kind of answered talking about fair value gaps. We kind of talked about order blocks. We talked about pullbacks. talked about fib, talked about entries. So you kind of hit all of that. They're all related to each other. All right. So right now, the buyers are, this buying candle is interesting. And for me, I want to see this level broken right here, which, is that fair value gap. Since we're using that, I'll just take that. I'll just do this. I want to see this broken before I start getting into buys. Why do I want to see that broken? Well, if that does break, then it comes this old resistance, excess support, that gives me a lot more confidence that this was going to trend the rest of the night, right? So I can let this break and then retest this and then be fine with that. The entry here is off of this order block down here, right? And so if price pushes back down, I think that's where we should enter and pull just below that. And so this is something that I'm looking for tonight and probably if this one's broken, probably take this up to the next fair value gap up here, and look for a 1 to 3 and possibly further, right? If just based off of what this 1 hour is showing us, right, we're probably going to get the next few candles that are going to be bullish tonight. All right, so let's take a look at that from if it breaks, would that be divergence? Let's take a look. It's already divergent to the downside right now. So downside, you're getting top side resistance for downside moves. And so just to show you what this divergence that I'm looking at is right here. These are the tops here. These are the tops here. Right, so price going that way, but on the TDI, price is going up. Right, so if this right here is going up, whereas this right here is going down, right? And that's occurring, I think I showed this earlier, that's occurring at the 1 hour 50 EMA. So you have hidden divergence at the 1 hour 50 EMA. There's a lot of potential for this to create, for this to sell off right there. So that's divergence. That's hidden divergence right there, Judy. And usually we take those, but one thing, if you watch the videos, one thing that we look for is what the lower time frame. So if you go to the time frame below it, that's hidden divergence right here. And we're touching the bands. That's hidden divergence. That necessarily isn't. As you start getting lower, you want to see that align with the lower time frames. Yeah, and it kind of does though. Kind of still aligns for the sales. It still looks like the sales are going to have it. Yeah, this was the great move that I looked for at the 7 o'clock. All right, so hopefully that, yeah, you're welcome. So that is fair value gaps in a nutshell. And the more that you see that, and you see liquidity zones and order blocks, you kind of can spot them with your eye without using the indicator. You kind of get used to it. Once you know what you're looking for, you kind of get used to it. like this push down, you know that this is a liquidity zone right here. So you don't, you really don't need a lot to mark this out. And so then it pushes up, push back down, and you enter the order back up there. That's also a fair value gap. The fair value gap would have been wider than the liquidity zone, what introduced that low. And then you have the break. That first green candle is right here. So I wouldn't have needed a wide range there. I would have just waited for that and entered in right there. Right. So fair value gaps are going to give you a wider range, but if you know what you're looking for, you don't need that wide of a range. He said, "Will there be a quiz?" This might fair value gaps may be a quiz question, and we're due for a quiz. I got to talk to Terrace about this because we're due for a quiz. I got still got our Kahoot membership. Yeah, the rectangles. Yeah, the rectangles are my buy and sell zones. Yeah, and that's why we use them. Okay, so hopefully that was good for tonight. With everyone looking at this, let's look for. And I kind of stalled because we're in this consolidated period, which isn't a good way to trade. That 7 o'clock went up, and then we went into this consolidated period. So I kind of didn't take a position off of that, and I think it's good that we walk through this. Team Alpha, stay ready. Yeah, you guys were winners last year, or the last contest, the last quiz period. So yeah, I think we do add fair value gaps. How many candles is used for fair value gaps? That's a question. Who knows the answer? Yeah, Terrence, we're due for one. How many candles is in fair value gaps? And then what is the range? That's right, Dr. Am. 3. What is the range for buy fair value gaps? That's a question. 3. That's right. What is the range for buy fair value gaps? What is the range? Top of candle 1, bottom of candle 2. That is wrong. Judy says first and third. That is wrong. Tisha says candle 3. That's wrong. Michelle says top of the candle and bottom of candle. That is wrong. Judy says top of candle 1 and bottom of candle 3. That is wrong. Joy says top of first and bottom of 3. That is wrong. There's one thing that everyone is missing. All right, so it's not the top of the candle, it's not the bottom of the candle, but it's the top of the wick and the bottom of the wick. So the candle is what's colored. We don't count that. We count the wick range. All right, so that could be a trick question on our deal. That's right, Brian. Top of wick 1, bottom of wick 3. Yep. So what about a sell fair value gap? What is the range of a sell fair value gap? What Brian said. A sell fair value gap. What is the range? We did the buy fair value gap. So he said bottom of wick 1 and top of wick 3. That's correct. Yep. Judy got that one. All right, so now we should be able to go through and watch these play out as they go. If we just trade just strictly on fair value gaps, we can watch that play out. You have to consider price action. You got to consider the candle. And by the way, is anybody in this hidden divergence play that's selling? I'm not in it because I made money on this one. But is anybody in this 1 hour 50 MA rejection hidden divergence play right now? Because it's selling off really nicely. It's an interesting deal. I'll turn on the MA. So the 1 hour 50, you have the hidden divergence right here. Let me see what it looks like on the, I really can't see it right there. Yeah. So now it's coming back down. Yeah, I'll look at gold in a second here. It's coming back down, and this is the area that we were kind of looking for the buys. We'll just use our fair value gap here. And I just love candlestick anatomy with TDI. You can see that it's selling off. And so this was the push up, but as it sells off, this candle hasn't even cupped over on the hour. That's crazy. It's like it's the TDI is barely moving. If you look at this movement and just measure that, it's retraced just about a little over 23.6%, whereas price action has retraced 50%. And then this is candle body, really. So even if you measure candle body, that's 78.6%. So price action has fallen faster than TDI, which means that sellers are in the market, right? Which goes with this trend. We failed to close right here, and so now the sellers are in. So if you got in on this 1 hour hidden divergence right here at the 50, that was a good sale for the 8 hour. The 7 o'clock was good. You could have caught that on the fair value gap or the liquidity. This pushed lower. It broke, retested. You could have got in right there, but the sell down also was a good play. So two ways to look at that. All right. I'm thinking about getting into these buys because I think the hour still has opportunity to push up. And we're about 9 minutes left and we haven't been able to eat up this candle. And so I'm thinking about entering into the buys. I'm waiting for where the bottom of this is. We got to let this go. And we know that, this is as far, it can go down as far as this. And then if this fair value gap, since we're doing fair value gaps tonight, if it breaks that, then we're not interested anymore. All right, so 4-1 on that would be really nice, right? $1 right on that 200, and then we'll jump. I'm going to jump to gold here in a second. So this would be a 1 to 6. So we're not going to take the 1 minute. And if I turn on the fair value gaps, you're going to see a lot of sell fair value gaps pop up just because it's going down, it's pushing down. So you have to go to a higher time frame. Yeah. That's the only thing that I don't like about fair value gaps. I like using liquidity a little better, just because these momentum candles, and so now it's marking off the top of the last one, the bottom of this one. That's liquidity, and you just buy off of that to the downside. And then they have fair value gap right down here at the bottom of this range. And this is on the 10 minute. It'll change. The candle size will change and get it. So there's a lot of different entries that it'll have. Like all of this is on the hour is fair value. So it'll change based off of that. And so that's the reason why I don't use it too much. I like time my entries based on momentum, just because you have a momentum candle doesn't mean that direction has changed. You haven't broke structure. You're just doing a pullback. And so I kind of just like looking at how it comes down and price action to time when we get in once we have identified the zone that we're looking for. Like this could be liquidity right here. Turn that off. All right. So I'm thinking about getting long here. We're at the 50%. Thinking about getting long. But I think it's going to come down a little bit further. So this sell off may be for tonight. It may be a 9 and 10 o'clock type sell off for tonight, but I am looking for buys tonight. I think I will go to sleep in buys at some point tonight, but I think I got to give it an hour before that happens. I want to see how this one closes. If it closes with any considerable amount of wick, because this rejection right here is important. So that divergence needs to work itself out. And this hour hasn't come down along. So yeah, for that, I'm going to hold off on entering into the buys for right now. All right, let's look at gold really quick, which isn't really doing anything right now. Just in this consolidated pattern. It's similar to Nikkei right now in that it is, it has been bullish, and now we've had a significant pullback. What I see is this inverted hidden pattern shoulder, left shoulder, right shoulder. This is the neckline. This is the head, and we're starting to climb out of these bottoms now, creating these lower highs or higher highs. So that's what I see. Us staying on top of 2400, going up to fill some of this fair value up here. I see it climbing, but we need a break of structure, then a retest in order to get in on those buys. I think this is going to be a play for tomorrow of possibly looking at buys, or if you're up late tonight during London session, or possibly looking at buys tonight on this. If you look at, this is the low. If you look at the green that put in that low, it's right here, and we're ranging right in there. Really, let's see, that's the hour. So I mean, even if you grab those two, that would be sort of the range. And then if you look at the momentum candle, which is like right here, and both of these are momentum candles, so I can use this one as the fair value gap that is dipping into, which is really just the bottom side of left shoulder, right shoulder that is dipping into to buy off of. And so if I was looking for those buys and I thought that was climbing, you could use that as a liquidity zone. Pull it to the bottom of that and then take it to the high. So that's my thoughts on gold. 2,400 is the important number on gold. That's where we've been looking left. 2,400 has been significant. So you see all these rejections and reversal and pivot points on 2,400. And that's where we're at. So 2,400 is a pivot point. If it acts as support, we could climb higher, which that's the way it looks right now, at least up to 2,450. And retest a lot of this fair value up here. Retest this stuff. That's where the structure changed, the breakout change. So you could potentially see it go back up there. So that's my analysis on gold as Nikkei falls. And is, you see, this is the reason why I like it. It's like it came right back down there. It's just bouncing off of that area again. Yeah. Yeah. And so really looking for this area to hold. I think we're going to push up a little bit higher. All right, good session tonight. Did we learn anything tonight? Fair value gaps. We covered fair value gaps. We covered pullbacks, covered entries. What else did we cover? Order blocks. Covered a lot of stuff in fair value gaps. They're really just saying the same thing. Support and resistance. I mean, this support and resistance right here is going to be key. I kind of want to get long on this one. And I kind of want to do that on the hour. So we're going to see how this one closes. We have 1 second. So the next candle just opened up. This is fair value right here. You go really quick. We go bottom of this third candle now that it's closed, and top of this next candle. And that is the liquidity zone. All right. For the buys. So yeah, we covered a lot. Good session. I am looking for the buys, but only reason why I'm not getting into these buys because this divergence that was here has barely played out, and so that's kind of scary for me. So I'm going to see how it comes and test this liquidity area and to see if the buys are there. I'll probably wait. I'm going to be up for probably another half hour to an hour, so I'll probably wait to see, and then we'll push from there. Yeah, with yen falling, well, you know, USD is always the quote unless you're trading Forex. So USD is the quote. So it depends on the strength of the DXY. But if DXY is bullish and it is the quote, it's the end, then JPY USD is going to fall because USD is going to weigh it down. And anything with JPY, if you're trading Forex, if JPY is weak, then it'll be bullish if JPY is the quote. All right, that's what we got for tonight. We're going to look for this area 39.5 to hold as support, and then we're going to just enter in a trade, have our stop loss below there, and I'm going to ride that for the rest of the night. I'm going to go to sleep on that and take it to the upside, but I'll probably do that around 9:30, close to 10 Central Time, and then take it to the upside. So we will see if it breaks through that before then I won't do it. But if it does, then yeah, I think I'm going to get into that. I like that 7 o'clock candle. 7 o'clock usually predicts what the rest of the hours are going to do. Like for instance, this is a 7 o'clock candle, right? And so then you get the rest of the candle through the night. All right, well, good session tonight. Let's keep doing this. Let's keep showing up. We're traders. Let's keep doing this and see where we end up in a few years. I think we're going to be multimillionaires if we perfect this craft. That's just my opinion, and we'll see what the Lord says about it. All right, everyone, have a good night. We'll see you bright and early tomorrow. All these buys look good. We'll see you bright and early tomorrow, and yeah, let's go from there. All right, everybody.